It made sense 10 years ago to invest in Badagry.
Yeah. I was speaking to somebody some days ago about the fact that in some places in Lagos, if you build rubbish, people will rush that rubbish, right? Because people are looking for apartments regularly.
That's why I said at the beginning that, when the people making a lot of noise are the people trying to get money from you for an investment, then you also want to be careful.
Real estate is just one out of many investment classes, right? When you look at the real estate market generally in Nigeria, because but do you think you are very, very competitive?
Nigeria real estate market has a way to actually reward the people that want to do it properly.
So I think Nigeria already gives you the reward for taking that risk, which is also the background or the backbone of this conversation also in terms of the higher your risk, the higher your return.
Hello everyone, welcome to the Edala Market Intelligence Podcast, where we talk about real estate, no drama, no noise, what actually works and what doesn't. So today we are going to be delving into how wealth is created in real estate. A lot of people think real estate is is an ideal investment vehicle for them to get into, but how do you actually make money in real estate, right? Aside from everything that's flying around, sometimes people think, when I buy a 5 bedroom duplex in Lekki or Ikoyi, yes, it's real estate, but is it an investment, right? When I, maybe buy land somewhere, is it an investment? So how does money and wealth creation actually happen in real estate? My name is Samuel Olatunde, and with me I have my co-founder at Edala, Dayo Oloyede, joining in this conversation as usual.
Yeah. It's always a great time to be here.
Yeah, always. So the first question I have, right, is this. As popularly acclaimed, real estate is a wealth creation tool, not just locally here in Nigeria, but it is globally recognized. So, in your experience as a real estate professional, can you help understand why people have this mindset that real estate is the perfect wealth creation tool over the long term?
Okay. So to speak about that, it's important to explain what wealth creation is. Wealth creation is acquiring, managing, and growing assets over time across different investment classes, right? And real estate is just one out of many investment classes, right? You can choose to invest in different investment classes depending on your psychology, your goal, your risk appetite as an investor, right? However, the reason real estate has stood out over the time is because real estate has proven to be stable and it has proven to be tangible, right? So you can pass on real estate conveniently across multiple generations, right? However, it's important to, when you're seeing real estate as an investment, it's important to be able to clearly analyze real estate investments before investing in real estate, right? In real estate investment, there are different models to invest in real estate. There is buying lands for for flipping capital appreciation over the future. There is also buying properties or assets and getting cash flow from the assets, right? Still under capital appreciation, there's also different strategies to invest. You can buy a land, do a deal with a developer. You can buy a land, sell that land or resell that property in the future at a very good capital appreciation value, right? So it just depends on what your strategy is and what an exit or what returns should ideally look like for you. Because for different investors, for someone like you, your an ideal returns can be you're looking at 100% in 1 year. For somebody else, with a different customer psychology, their own exits or their own ideal investment thesis can be they want to exit at 50% or 30% in 1 year, right? So just to throw back the question to you, what do you look out to or what do you look out for before you invest in real estate generally?
Okay, so personally, right, my philosophy around real estate is, value creation, right? So when I say value creation, of course, we're talking about wealth creation over the long time, but for you to create wealth, the medium, the model must create value, whether to yourself or to other people. That's what commands, wealth over time. And just like you explained, the way real estate works in at the most basic level, right, is buying into an asset that is stable, adjusts to inflationary pressures over time, and if you do it right, you can have a higher net margin. Your investment can perform better than the economy, right? And that's where people want to be. not just wanting to buy an asset that just finds a way to adjust to inflation, right? For example, let's say I am getting into a position this year. I'm buying an asset, right? That's the most fundamental way to play around. I'm buying an asset, say a land somewhere in Lagos, say a Shongutedo exists right now. So from my own perspective, what I'll price in is what is the future value of this asset I'm getting into, right? In the next 2 to 3 years, and then in the next 5 years, and then in the next 10 years, right? The future value of an area like Shongutedo, right? Um, can yield a better return, right, in terms of value build up, right, much more than now I'm talking in multiples now, much more than a much more organized location like Ikoyi,
Mhm.
right? So the rate of growth in value that we would experience in a place like Shongotedo, for example, would not be the same like a place in Ikoyi. But of course, several investors also argue that the absolute value of what it is growing by is what matters. When you talk to institutional investors, sometimes it's better for me to put in 5 billion and get 7 billion in 2 years than for me to put in maybe 500 million and be looking for 1 billion, right? A lot of people have different scenarios. And, for people that are my age, right now, people our age, less disposable income. So we see people our age, moving in direction of, okay, what can my 20 million, 50 million, 100 million naira afford? Right. And when they start to think in that direction, that's why people that are our age are more aggressive on the return. So they want to tend towards, going the model of, buy low, buy affordable, and buy the future value. Right. While the institutional capital guys, people that have the large capital base, you know, want to do the much more premium and more predictable locations. And I feel like the same thing works across all other investment models outside real estate, right? For example, in the crypto space now, you see people just focus on a couple of the popular cryptocurrencies and say, okay, I want to focus on this. This is tested and trusted, BTC, Ethereum, and the likes. But the people that are not that bougie in capital base want to do the meme coins, right? And hope that they do. So that's just how investment plays, and is also the same in real estate. So different strategies, you know, different dynamics, and
Mhm.
that's just my own philosophy. Is this, for an investor, you either find yourself at the most investors at the beginning find themselves playing at the first end of the curve, and as you grow, you become more risk averse. You want to play this, you want to deploy your capital in fewer places, and much more guaranteed returns, because when you grow older, capital preservation is also one of the things that you think about,
Mhm.
right?
Mhm. I think it makes sense. I think just speaking about what you spoke on, you made mention of an example in the crypto market, right? And I think it's also with same thing real estate. I think information is one of the most important advantage you can get, right? If you know how to get information and valuable information, right, and take position into different locations or investments arrangements before it becomes popular, because even in crypto, if say for example there's a new coin that came out, if you took position in that coin with an information that
Mm-hmm, mm-hmm,
it should exit at this particular point in time, you'd get some good value, right? Compared to somebody that comes into that investment when it becomes popular and maybe something happens to that coin, or the
mm-hmm,
fundamentals
mm-hmm,
behind that coin is not valuable enough for you to give it a sustainable value. I think that same thing with also different emerging or frontier markets or sub-market in the real estate space, because when you also look at it, it's very difficult to know the locations or sub-market that will continue or continually go in value. So we can argue that Badagry and maybe Ibejuleki were in the same on the same level playing ground. Badagry, Ibejuleki, Ikodu were on the same level playing ground in terms of entry value
some years ago.
about 10 years ago,
Mm-hmm,
right? I remember my mom bought a plot of land, I think about 200K or 100K in Ikodu. Today, that land is now worth more than maybe 5 million per plot.
mm-hmm.
But if you take that same investment and you had gone into somewhere like Ibejuleki or
Yeah.
Ikodu,
Mm-hmm.
you get far more, higher growths in terms of the capital appreciation for that property.
Information.
Right. So I think
Information.
information is
Mm-hmm,
the most important
mm-hmm,
value,
mm-hmm,
right? And how do you get information is by knowing the right developers to work with, because if you also play with the developer is just also like in the crypto space, they are the
They are developers of
developers
the
products,
products.
right?
Yeah.
So they also move the market in some certain ways, right? Another one can also be regulators, right? If you understand what the regulators are trying to, because real estate is also largely driven by the regulators, right? If the government decides to do infrastructure across a particular region
Mhm.
in the next
Mhm.
5 years. For me, it can be arguable, but I feel like one of the reasons why Badagry is not developed today is because of infrastructure. All right, on all grounds, Badagry is like the best. Badagry has every opportunity a pair could have
Could have
gotten.
had.
Yeah,
Yeah.
because Badagry is close to the what's it called? Is
The border.
the border.
Mm-hmm.
It also has waterways for ports. It also has it has a lot of industrial um
Capacity. Yeah.
a lot of industrial hubs, Abara, a lot of
Very,
multinationals, a
very
lot of
close to all of those
so
places.
all
Yeah.
of those things, right? If you look at every value
It
Ibejuleke has
made
slotted
sense
in,
10 years ago to
yeah,
invest in Badagry.
yeah,
It made
on all
sense.
grounds. So
Mhm.
I think information is one of the most important value points that you can ever play on in the real estate space, right? Yeah.
So I know we've talked about this before, but I for viewers that have not seen the previous episode of our podcast, I just want us to quickly, demystify this, right? In real estate right now, we've talked about value creation and wealth creation over time. I want us to now focus on um actual return on investment. What constitutes return on investment, right? And maybe with a focus on assets that give cash flow. Because for me, I believe the best asset you can get into is an asset that grows in value over time and also has the capacity to generate cash flow to you.
Mhm.
And in real estate today, in Nigeria, the where you see cash flow is in rental value, right? While rental value now has different dynamics to it,
Mhm.
from shortlets to the annual rent, but this has been classified, right? In maybe Lagos today, you see different pathways to it. Number one is commercial leases. Number two is shortlets, and number three is the traditional rent, right? I just want you to sort of give our listeners or viewers or audience an overview on the peculiarities behind these three models, and also bearing in mind that, of course, the people that want to pay for rent for residential properties still account for bulk of the market, and maybe debunk some opinions about shortlet, how attractive people think it is, right? And all of the peculiarities behind the commercial space as well.
Okay. So in to answer that question, I would start by saying in investment, there is a philosophy or there's a popular saying that says the higher your risk, the higher your investment yield.
Mhm.
Right. So when you look at different forms of cash flow in real estate, from the shortlets to the rentals, yearly rentals to commercial leases, it's also good to look at it from that angle. Shortlets is very risky in terms of the competition, in terms of the investment you put in it, right? Um, so it's important to also understand that because of that level of investment and risk they have put in place or they have encountered, right, in shortlets, it's important to also, compensate you to realize that it's also very, very lucrative and it has a very, very high yield, right? So if you invest in shortlets anywhere in Lagos, averagely, if you have good marketing, good management, good cost of doing business, which are your operations cost generally, you get your payback period in about 8 to 10 years, which is a very, very impressive yield for any investment, at least in the real estate space, which happens to be the highest yield in the real estate space, right? The second level is now, which is the second highest return yield, is the commercial real estate. Commercial real estate gives a payback period about 12 years to 13 years in some cases, right? And for me, right now, commercial real estate is that sweet spot because, like I said, the higher your risk, the higher your investment.
Mhm.
Commercial real estate, you don't have to invest so much. In fact, your tenants are the ones that will furnish the office space or the commercial or retail space to their
Mhm.
taste,
Mhm.
right? So you don't even do as much work as the person that puts up an apartment for yearly rent because that person has to fit the kitchen, fit the bedroom, all of those things. Commercial leases, you just leave it in some cases carcass, right? And the tenant comes to the market, properly structures it and all of that, right? And for that kind of investment, it pays you in 13 years to 12 years, right? And then you now have the yearly rentals, which pays you in about 15 years, 17 years, depending on the case. You can take you up to 20 years, right?
Mhm.
So obviously, with the definition yearly rentals, you don't have a lot of risk. Yeah, you're not having to taking a lot of risk to that
Mhm.
investment because you just buy an apartment. You're not investing in furnishing. The market is not competitive. In fact, there's a very very huge supply. Or so there's a very very huge demand in terms of what people want. Right. I was speaking to somebody some days ago about the fact that in some places in Lagos, if you build rubbish, people will rush that rubbish, right? That tells you how much the level of demand, right, that the
Mhm.
market has, right? Because people are looking for apartments regularly,
To
right?
stay in.
To stay in, right? So the yearly rentals basically is it's a structure, a model that basically welcomes people that don't want to do too much work. You don't want any stress. You just want something that is very very sustainable, something that can pass on to your family. You don't mind getting a fairly average yield, right? And that conversation now drives to the fact that if you're looking at real estate in that lens for cash flow, if you are able to do more work, more investment, more risk, you get higher yield generally. And but another point of conversation generally now beckons around the fact that really, when you look at it in terms of comparing Nigerian real estate across board, across the globe, maybe in Africa or across the world, do you think that our real estate market is very, very competitive in terms of the yield, right? And the reason why I'm asking this question is because we have a lot of investors that also play across different markets. There are a couple
Mhm.
of investors that play across maybe the Middle East or even Africa. And there are markets currently right now, like the Bali market, the South African market, that are
Mhm.
doing very, very well in terms of hospitality and the yield they can get from those markets, right? But generally, do you think that when you look at the real estate market generally in Nigeria, across board, do you think our yields are very, very competitive globally?
Okay. So this is a very controversial question, and I will try to answer it as simply as I can, but I'll share my perspective on why I think it is controversial. Whenever the people that are trying to get you to buy something are the one making a lot of noise about it,
Okay, okay.
right? You also want to fact check, right? In Lagos, as we see, a lot of people are selling, real estate, shortlet, blah 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 blah. In the past, people buy shortlet apartment without structure and they go burnt. You buy apartment for shortlet and you end up, being the one to run your shortlet with no expertise, no nothing, and you end up converting the shortlet into a residential, model.
Mm-hmm.
And the same thing goes to all of these other places, right? You talked about Bali. I've been seeing a lot of noise about Bali, even Dubai, right? And yes, the yield is there, but structure is what gives you returns, right? But we don't see a lot of conversations online about structures, and that's why I said at the beginning that when the people making a lot of noise are the people trying to get money from you for an investment, then you also want to be careful, right? And the same thing happens everywhere in Lagos. But the perspective I want to throw in, you know, whether we are competitive globally is, Nigeria real estate market has a way to actually reward the people that want to do it properly. And when we look at the people that want to do it properly, right, look at some of our projects, we know the numbers, right? We have a facility that generates, that has 17 apartments and we generate 25-30 million month on month in revenue for that facility on Shortlet. And the data is there. But it would be myopic for an average person to use a data point to make
To
assumptions,
general, yeah.
because they may not have an idea the structure that we have put in place to ensure that happens, right?
Mm-hmm.
I will share a bit of perspective. Recently our Instagram page, Lodge and Loft by Edala, was taken down, but it was suspended by Instagram, and that Instagram page currently accounts for bulk of the bookings that we get. Right now, today I am anticipating a decline in revenue because of a fundamental factor that affected, where our booking comes from.
Mm-hmm.
Right, and this is what you may not be prepared for as a shortlet operator. Now, moving back to other economies, you mentioned, I like the fact that you mentioned, in real estate in shortlet today, when you do it properly, you can make your money back in 8 years, right? You may not be able to say the same for
Across,
even other economies. The only places you can compare, even in Nigeria, you cannot say outside Lagos, you cannot say the same
mm-hmm.
for
Mm-hmm.
any other place. So, which means in other economies, aside from the cities where demands are constant, you can do 70%. across board, then you may not be able to say the same for every other places, right, in the same locations. And the fact that I want to, you know, the point I want to draw out is now pertaining to structure. In Lagos today, or should I say in the US today, in New York City, let's say, you're boxed up enough, you can afford an apartment in the suburbs around New York, right? You mortgage works there. You can put in your deposit, your down payment, get a mortgage, buy a property, start earning rental income from the property you financed, right, to mortgage. And in a short while, you can, refinance that property, get another mortgage, on the mortgage you already have, and, build wealth over time, depending on your strategy. And I've seen people push this narrative online, and I've seen people who also, do this over time. But, it is not structurally the same here in Nigeria. I've not seen anybody, you know, do that in Nigeria. Maybe say you're able to buy an, or maybe because people don't think about that. Because in Nigeria, we don't have a debt culture, right? People shy away from borrowing money. People want to buy assets, and it is their mentality to want to fully pay for that asset in cash. So you see the average person that earns money, right? And maybe because the mortgage system and the rates are not so good, that could also be contributing to it, economic factors. But Nigeria right now has not scratched the surface in terms of the pinnacle of the structure that is needed to push us into where we need to be, where we can have an exponential catalytic growth, right, in real estate today. And we're not there yet. And all of these things that we have been able to do is based off people's savings and institutional capital flowing around. But if every single member of the society today can unlock the capacity to invest in real estate, access finance, and build wealth over time, I feel like real estate has the capacity to make a lot more people money in Nigeria.
Makes sense. Makes sense. Just to also add to what you have said, so when you also look at, I agree with you 100% in the sense that the Nigerian factor, or Nigeria as an emerging or a frontier market, already gives that risk premium to the fact that you are investing in this market, right? Because I don't know any other place in the world where you are getting about 7-8% yield on that investment every year, right? Only in Nigeria, right? At the moment, or only in Lagos at the moment, right? You can't get that kind of yield
No, no.
in
I mean,
US.
it won't be 7-8% yield. It would be making your money back in 7-8 years.
No, no, no. The yield.
The yield for I feel like the yield for shortlets is well over 10%.
So conservatively,
Returns.
in terms of the market returns.
I mean,
Let's say,
in the best places in Lagos right now,
mm,
the data says it. You can confidently, if your structure and everything is right and near perfect, you can, if you have a very good strategy, you can near 13%, thirteen
yes,
14%
yes,
in annual yield if you tick all your boxes right,
yeah, yeah.
and you
But
invest, upfront,
mhm,
which a lot of people may not be able to do, to drive down your cost.
but let's just say averagely, because it's also good to be very conservative, right? I agree 100% because you can do 15, 13, 12% yield, annual yield in terms of short-term investment. But I don't think in the developed market like US, UK, and the like, you can't do up to 7-8% yield, right? So I think Nigeria already gives you the reward for taking that risk, which is also the background or the backbone of this conversation. Also, in terms of the higher your risk,
The
the
higher
higher
your
your
return.
or your
Yeah.
returns generally. So, ask you a question personally: if you
Mhm.
have 100 million today, right, and you're in your 40s, you have children, you have responsibilities, you have obligations, you have a business to run. However, you have 100 million idle cash, and that's all you have for your investments, right? How will you allocate that capital in the real estate market today?
All right. That question is a bit difficult for me to answer. I think that we should actually bring someone that's in that age range to this
Okay, okay,
conversation to answer that question. But I'll just share a bit of perspective on what I think I might do. If I have 100 million naira to play around wealth creation in my 40s, I will be very conservative, right? I think almost after money would go into from my own perspective. I run a business. I'm an entrepreneur. Almost half that money would go into and a medium that I can directly control. Maybe start a business or set up something or set up a business that makes cash flow. Then the other half can now go into a bit of stock and real estate. But of course, I may not be able to do anything tangible. You know, with real estate, maybe say an apartment that gives me cash flow. So I will be very, very heavy on, landed properties that can grow in value in 5 to 10 years. So that when I'm in my 50s, I can exit little by little to get into other positions. Right. But because I'm an entrepreneur, I will always think in the direction of, creating value with my money. So that's how I would operate. But I understand that some people may not be entrepreneurs, and some people will just lean in heavy on conservative models. You might want to do S&P indexed stock options. Modeling the U.S. market, which is relatively stable and keeps the value of your money in check. In dollar terms, right? If the United States continue to become, continue to retain their powerhouse, but that's exactly how I would think. But the truth is, if you have 100 million naira in this economy, there's not a lot you can do investment wise, right? There's not a lot you can, aggressively do, right? Unless you want to put all of your eggs into one basket. There's not a lot of options. And once you try to divide it too much, you miss on the opportunity that bulk fund can make for you via other mediums. That's why I said at the beginning that, oftentimes it is best for you to go add, go in and add on something and be sure about it than split your funds across different baskets. Right. So moving away from 100 million, right? We have clients that, have a lot of money to play around. Right. And the question I want to ask you today is if you have 1 billion to play around, because of course we have clients that we discuss that
Yeah.
do all of those things. If you have 1 billion to play around today, right? How would you allocate that fund? Let's say 1 billion specifically for real estate. You just want to do something real estate. You maybe earn dividend, or you cashed out on a fixed deposit that you've had since last year, and it's 1 billion, or maybe you bought some commercial papers, earn a decent rate on it, and you just want to move away from that. So how would you allocate the 1 billion?
So if I have 1 billion to invest in the Nigerian market today, I'll be very, very aggressive. And I would say the reason is because I believe that the Nigerian real estate market or the Nigerian investment landscape is a very, very short to medium term market. I don't want to play too long term in this market, right? So what I will be doing is I would first of all look at that 1 billion. I'll take 30%, which should be around 300 to 400 million, buy a land in a very premium location, right? That I can do a JV with a developer, all right, such that if I buy a land, say for example, a land in Ikeja, maybe Allen or Ilupeju or say Ikate in Lekki, Ikate, Osaba, and the likes, right? And I find a developer to do a JV. So 400 million will get a plot of land. Find a developer, do a JV, say maybe ground plus 5 story building, 4 story building projects, and we do about say 70-30 or 65-35. I would be able to, in 2 years, I will be able to double that 400 million.
Possible.
That's one way,
Possible.
right? So for me, that 400 million is already an investment that is able to double in a short period of time.
Mm-hmm.
Now, the remaining 600 million, I would take 200 million, go and also buy a property in some locations that are slightly doing um, well in terms of the cash flow, right? So maybe Sule, Yaba, Ikeja, also Ikate Lekki, right? I'll buy into apartment that I know that have good potential to do good capital appreciation or good cash flow. So cash flow in terms of shortlets and also capital appreciation, because there are properties if you buy in Lekki Phase 1 for 200 million, in less than 1 year, you can sell a property for about 300, 350 million, right? If you choose rightly, right? So, but on the mainland doesn't really have a very, very aggressive capital appreciation market. So I would want to, but it has a very, very good cash flow market. So if I'm coming to the mainland, I won't buy a property really with the goal of wanting to almost double in terms of capital appreciation, right? So I would buy because I want to get good cash flow, which should be a shortlet project. So I would take about 250, 200 million for that. So the remaining 350 million, I would invest in a very, very stable market like Ikeja GRA, Lekki Phase 1, or Ikoyi. There's some areas in Old Ikoyi, right, that you can buy a two-bedroom apartment for around 350 million at off plan, right? Talk about places like Osborne, Forshore 2, and the like. There are still some very cheap properties because I would say maybe they are already getting towards the outskirts of Ikoyi, right? So they command the same value, close to the same value of Lekki Phase 1, right? Coming to the mainland, I will be looking at a location like Ikeja GRA that I know that the market is always there. It's always premium, right? And I can be sure and guarantee that I'm not looking for something that would go very, very high in terms of the capital appreciation, but I want just something that is very, very stable. So that's how I allocate it. So like I said, the first one is a very, very aggressive 2-year investment that can exit and get double. The second one is a cash flow, also aggressive, but it's cash flow into the future. I'm getting my payback period in about 10 years. Then the remaining, say 30% is a very, very stable market. And that one is strictly for something I know no matter what happens in the market, it's untouchable, and I can, easily transfer as inheritance to my children and all of that.
Yeah. So I feel like your perspective is solid, and you're thinking like the average people that we talk to at Edala, right? And the reason why I say that is I want us to now talk about the risk and opportunities, zeroing down on the mindsets of the average Edala client, right? Because I feel like we can both agree that most people that buy from us, first off, most of them are not really hungry people, right? They're people that are successful, want to play around real estate, and want to do it stably. So, what are the mistakes that you think other people might be making when trying to get into a position in real estate today, in all of the models that we have earlier talked about?
Okay. So I think the first mistake I think a lot of people make is they put themselves, because there's a huge disparity in the perception or the psychology of the investor and the POV of the user. An average user for us for a shorted apartment is a Gen Z. They behave in certain way. They look at the experience of the property in certain ways. Now, the average investor is an elite. He stays in the Koyi, stays in the Kenya GRA, stays in Lekki Phase 1. He has a standard. He has an idea
Of
that a
what the
lot of
property should
times,
look
a
like.
lot of times can be asking for too much, right? Whereas what the customers want is quite simple and it's quite straight to the point, right? So I think the mistake a lot of people make is that they want to be the users so bad, right? And it affects their investment. For example, somebody will say, I can't stay. I know there's some psychology around, or there's a saying that says if you can't buy it, or if you can't
If you
use
can't
that
use that
product,
product,
don't invest.
don't
I don't think
invest.
it's true with real estate investment. You are not the end user in real sense, right? So you want to be able to be unbiased. You want to reduce that biasness for yourself, because if you are too biased, you'll be losing out of a lot of opportunity in the market, right? I think that's the first mistake. You want to, if you don't understand the end users, don't try to be the end user. There's no point. I think that's the first one. The second one would be that because the real estate market is not very, very regulated and there's not a lot of structure in the real estate market. I've seen a lot of customers complain about documentation for properties they have bought a couple of years ago, right? And all of that, even though they did proper due diligence, right? That's also one risk that a lot of people, experience or face, right? However, I think recently we have seen very, very good development from the government angle as regards tightening the regulatory structures for real estate. For example, there's a association for Redan. There's an association for what's the name of this? There's a real estate
Regulatory
regulators
agency.
here,
So that's last
Laswera.
rara.
So all of these regulators, right? They are coming in place, and there's regularly or frequently now we have seen that there's a lot of collaboration,
Discussions and synergy. Yeah.
synergy between the government and the actual operators, because the
Operators.
developers are the real operators in the real estate space, right? So I think There's a lot of conversation going on, and the government are also acting upon that to use and further. For example, right now, I think about 2 weeks ago or 3 weeks ago, they stopped doing approval manually,
Mhm.
so you can now do your approval online. So stuff like that, so such that anybody can search for your approval number and
And
get and
validate it.
validate. So
Mhm.
development like that, are helping to further strengthen the regulatory risk we have in the real estate space. And lastly, another opportunity I think people miss is as a result of analyzing different investments, right? In the real estate space generally, once you tick some boxes as regards the investors or the developers' background, their past record or past projects, and you want to now further dig down as regards maybe trying to. I've seen situations whereby, and the lawyers are on this table, right? Lawyers tend to now want to start asking for things that structurally
Let us
or
start acting as investment
realistically,
professionals.
starting as investment professionals, right? So and really, it makes a lot of customers miss out on investment opportunities, right? I will give you an example. In Montesa, there was a client that was meant to buy the two-bedroom apartment, and the lawyer kept on asking for different layers. In fact, I was seeing documentation that I've not seen before, right? Other than the normal one we know, right? The lawyer will ask you to go and bring statement of this one, and
A
at some
client
point,
asked for material schedule and he was asking really engineering and technical question. Wanted to see everything, wanted to see a material specification, wanted to see, which is normal,
yeah.
but if that is happening at the expense of getting into a transaction,
Mhm.
right? I mean, if you check the project that these developers has done in the past and you can see it and have an idea what their normal standard is, right? There's no point trying to while away time doing all of those things.
Mhm.
So after all has been said, I think we can both agree that real estate is powerful. But at the same time, it is not as passive as people think it is,
Mhm.
right? And it is not also entirely risk free. It has its own element of risk, although you can get around the risk pretty much easily if you involve the right professionals into it. But just like you said, the most important thing is getting into a position that makes you money. And as with other investment, right? If you get into a position later than you ought to, you are also losing some
Mhm.
element of returns. Right. So we have come to the end of today's episode of the Market Intelligence podcast by Edala. See you on the next one. Cheers.